actually expect the market to snap back a bit today. And part of that is because, and I talk about this a lot, but I think we're still seeing very significant retail flows into the market. And when we saw that last Omicron dip, we saw record buying by retail investors. So that's putting a bit of a floor on the market. I do think we're going to continue to see significant volatility over the next month because you're right. There are a lot of unknowns out there, always are.
So certainly a lot of unknowns that we are very aware of. Omicron obviously being the biggest one, inflation the second one, supply chain issues. We could go down a long list of things that we already know about. Are there any other macro trends that you think we need to be watching, whether it's here in the U.S. or overseas?
One of my biggest concerns continues to be the slowdown in China. And I think it's an unappreciated risk to global stock markets. We're seeing population growth slowing in China. We're seeing a pretty sharp slowdown in manufacturing activity. And so China is under pressure. And as you likely know, the Chinese economy is between 20 and 30% of global GDP. So any struggles there are likely to reverberate, and I'm not sure that's been fully priced in. It's also, frankly, a deflationary force that may keep a lid on inflation even in this country.
All right, a couple stock picks. Let's get over to those. I think when Omicron first emerged, a lot of us thought those stay-at-home, work out at home, study at home, whatever you want to call them, at-home stocks would really perform well. We have not seen that so far. With the current environment, a lot of uncertainty, do you have any stock picks that can kind of ride through this uncertainty into the new year?
We really like the semiconductor sector in general. I am becoming a little bit concerned about the very significant government spending on semiconductor production. And we have to remember that that sector is very highly cyclical. But there are some names that I think are relatively defensive, and one of those would be Taiwan Semiconductor. I think, it's basically flat or even slightly down over the last 3 months, while the semiconductor index in general is up about 10%. And it's a very financially disciplined company with a good yield. And so for anyone who wants to get exposure to a sector, semiconductor revenue pool is likely to double by 2030. It's a good defensive name that will provide you some cash flow in the meantime.
Any other picks? One thing we've been watching is a lot more people, well, at least talking about shopping online. I think just with some of the supply chain issues, people have been maybe not forced, but encouraged to go to the stores to get what they want. But anything other way to play the trend of more online shopping?
Yes, we really like a company called BigCommerce, which is a Shopify competitor. Shopify is trading at still, even after the recent sell-off, for around 40 times sales, and BigCommerce is at about 13 times. If you look at the chart, it does not look particularly attractive. It's a long-term hold. But frankly, if you look at the Russell 2000, there are parts of that index that are already in a bear market. Small cap has really been hit with the volatility over the last few months. So with careful selection of small cap names, and particularly companies like BigCommerce that are disruptive technology companies and that are basically a play on buying online, I think is a good long-term investment.